Hey, what's up, everybody? It is Friday, December 27th. I wouldn't read too much into today's sell-off in the markets. Actually, I was doing some buying myself in the big tech names. Fiscal flows are still very strong. We're coming in next week. Will be first of the month payments on Tuesday the 31st. And so we're going to have, it's very positive monetary conditions right now. And again, when I talk about monetary conditions, I'm talking about fiscal flows. I'm not talking about what these stupid monetarist people, which they don't even understand what they're talking about. I talk about fiscal flows. It's actual transfers from the federal government into the economy. Very, very strong. So today was a good day to buy the dip. Next week, I suspect by the end of next week, we could see the S&P at new highs, all right? So I wouldn't read it too much into today's sell-off. The thing I want to talk about is what's happening in the bond market, which I have to be honest, it bothers me, but it's not the first time I've been through something like this. Because I understand how the monetary system operates, and I've been explaining to you guys and actually teaching you and educating you on, understanding through the lens of MMT, which is the concise, proper understanding of how the monetary, and it's not, again, it's not a policy. MMT is not a policy. It's a body of knowledge. It's an understanding of how monetary systems function, and it can be applied on any monetary system, like the one we have in the United States as a currency issuer, on European countries that are not currency issuers, on a gold standard economy, on a fixed exchange rate economy, on an economy like China's, which is dependent on or leans heavily on, external demand through exports, whatever. But what I'm trying to say is that because I know how these things are going to play out, and I try to give you that in advance, I do give you that in advance, I tend to be early on some of these moves. What's happening right now in bonds, and we know the Fed cut rates 3 times, 50 basis point the first time and 2 25 basis point cuts, so it reduced it by a full percentage point since the peak back in March. And bond yields are going up. Bond yields are going up because there is this belief out there on the part of investors that the Trump administration is going to be inflationary with tariffs and high spending. I don't know what else. I don't think they're factoring in, anything from DOGE, the spending cuts. I don't think they're factoring in the rate cuts themselves and how that will eventually slow down the interest income transfers. I don't think they're factoring in how in 2025 we're going to have the smallest increase in cost of living adjustments for like Social Security and other things in over 4 years. So I don't think they're factoring a lot of that stuff in. We see what's happening with inflation. It's actually trending down towards the Fed's target. I mean, depending on what measure you use, it's anywhere from 2.4 to 2.7%. Okay, so that's not terrible. Basically, you're looking at an inflation rate that we had prior to the beginning of the COVID pandemic. And I told you that the whole inflation impulse, that inflation spike that happened during COVID, is because, the authorities basically shut down the global supply system. Everybody had to stay home. They shut down businesses. They shut down production plants. So that was artificially created. We had this massive spike in inflation because, yes, you had fiscal stimulus to keep people, with some income. But at the same time, they shut down everything, which was an idiotic, stupid, ridiculous move, and we had inflation. But now that's trending back down. Again, if you look at the numbers, it's the same as where it was prior to COVID, March 2020. So this, kind of mass stampede into shorting treasury bonds is another one of these, everybody jumping on board the same trade. I've given you so many examples of this, like, back in 2022 and 2023, when everybody was out of stocks or shorting stocks because they said the rate hikes are going to cause a market crash. It was going to cause a recession. Remember, coming into 2023, it was like universally forecast that there was going to be a recession. I was the only one, and you could go back and watch my videos at the time. I was the only one who said as long as the government, as long as Congress raised the debt ceiling, there wasn't going to be any recession. And when they raised the debt ceiling, I said the market was going to go to new all-time highs. And that's exactly what happened. And what we're seeing right now is like a mass movement, a piggybacking onto this trade in the belief that the Trump administration is going to create some kind of wild inflation. And then you had Powell, who comes out last week, irresponsibly, in my opinion, and says inflation's sticky, and he has this hawkish attitude, and he's, Mr. the Grinch that stole Christmas, and like, we're done with the rate cuts. Look, I don't care about rates. I told you that, many times. I care about what's actually happening in the economy, though. And there's nothing in the economy, to me, that says that interest rates are supposed to rise. I mean, I don't see, if you're basing Fed policy, if you're basing monetary policy on a, what he calls a sticky or a stubborn inflation outlook, it's just not the case. I mean, they have the data. They see the data. I mean, we're back to where we were pre-COVID. I mean, I don't know if they're going to get much lower than that. It's been very, very stable now for a period of time. It's going to be hard to get much lower than that because rates are still high. So, but there's the rate, inflation is stable. And inflation, by definition, is a continual rise in prices. And that's just not happening. So I believe when it comes to treasuries, unless it turns out to be wrong, where we do see another surge in inflation. I mean, look at oil, very steady, just trading back and forth between 66 and 72. It's been like that for like months upon months upon months. I paid $2.85 for gas the other day. I mean, that's not crazy. And we've just been in this trading range for a long, long time. So this is just wrong what's going on. But unfortunately, I have a position. Many of my subscribers have a position. Right at now, at the moment, not really working out. But that's only because, we're going again. So we're opposite kind of a mass psychology that something terrible is going to happen, where there's no evidence right now, but they built this narrative that, yeah, that's going to happen. They're not really given any reason for it other than, tariffs. And again, we see, tariffs are maybe a one-time, it's basically like a tax, a one-time situation. We also see China threatening to devalue its currency to negate the effect of the tariff. I've been saying this for months now, people. I've been saying we don't know. There's a lot of moving parts. All I said was that 2025 is going to be the Wild West. A lot of new things, a lot of new elements are going to enter the picture, and I think you have to be aware of what's going on. As far as stocks are concerned, the flows are just too strong. You're not going to have any kind of a market correction or crash with the flows as strong as they are right now. If that changes, I'll change my outlook. But right now, there's nothing in there that tells me that, we're going to have any kind of a major pullback. And, it's going to be techs. Tech stocks, there's areas of the market that are very undervalued in my opinion, which I'm not going to get into right now. If you want to find out about that, you're going to have to sign up. And by the way, let me just make an announcement. On the 1st of January, which is next week, the subscription rate is going to go up to, it's going to be increased to $195 per month. And also the courses that I offer, which is the 3-course bundle of Forex, the Forex video course, the daily treasury statement, and the MMT and value stock selection, that's no longer available. I got to take it down off my website. Daily treasury statement course is no longer available. I'm going to take that down off my website. I still have the MMT and value stock selection if you're interested, but you better act quickly on that because I'm going to be taking that down too. Anyway, that's it for today. Enjoy the weekend. Please like and subscribe, and don't forget, sign up. You got a few more days at the current rate. Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial. I'll see you on Monday. Bye.